Like to welcome everyone. My name is Dia Henricks, and I'm the Director of Sales for San Diego County with Escrow Options Group. We also have Michael Johnson on the call today. If you work with him, Mike, do you want to just say a little bit about what area you handle?
Yeah, hi guys, and thank you guys for joining in your busy days out there. Yes, I work in Orange County, Mission Viejo, Irvine area, South County, down San Clemente, Olive County. I've been in the industry about 15 years, and I've worked. I just had my 1 year anniversary with Escrow Options Group. So,
Yep.
yeah.
Woo, woo. Good job. Thank you again for joining us. Today, we are talking about the current state of the insurance market in California. And I can say, I recently just relocated back to California from Arizona. So some people do come back, but it was really quite an awakening for me on insurance, how much it's changed. Obviously, I've been living in Arizona for the last several years, and it was interesting, so because my cars and my home and all of that, my policy was out of Arizona. So when I got here and wanted to establish a new policy for my home and things like that, it was not as easy to do. So I'm very excited to hear about what the state is of the state of insurance here today. And so you guys, this should be a really great opportunity for you to have some knowledge that you can share with your buyers and with your sellers who are moving from one house to another, or a buyer that maybe has never purchased before. Today, joining us and our guest speaker is Aaron Rosen. He's from ARC 23 Insurance. And he's going to give us an overview today. I don't have a bio on him today, but I told him I'd let him talk about himself. So without further ado, I'd love to be able to turn this over to you, Aaron. Take it away.
Thank you. Thank you very much. So, yes, a little background on me. I've had ARC 23 Insurance. It's my agency. I started it about 7 years ago. About 11 years ago, I started with Farmers Insurance and learned quickly that I wasn't going to succeed with them. I went to work for another broker before I started ARC 23 Insurance, and just to learn everything about it. But as far as my involvement, I actually go to about 4 or 5 different broker preview meetings a week. So I'm very involved in the real estate side. I've been a member of Orange County Realtors for many years, was on the board of directors for many years, was affiliate of the year twice. So I am very involved. And I know that everything that we do is to support realtors, lenders, and the transaction of making sure it gets done. And insurance has not been easy lately. It hasn't been easy for us, and I'm sure it's not easy for you all. And so just wanted to, talk a bit about what's going on. So let's start with the state of the market. So many years ago, for those of you that don't know, when COVID happened, does anyone remember getting a car insurance refund? Did anyone get one? Does anyone remember that? So, okay, a couple of you remember getting a car insurance refund. Like, I remember I got a car insurance refund. I remember seeing a lot of clients getting car insurance refunds, and I went, this is really weird. But when nobody was driving, the insurance companies were charging too much. And because they're charging too much, the Department of Insurance said, you must refund their money. So fast forward through 3 years of COVID, and all the rates stayed the same on the car insurance. And then they were not allowed to increase the rates, but everybody was driving again after 6 months. So in reality, the rates should have kept up with inflation. They didn't. When you look at home insurance rates kind of stayed the same too, but inflation spiked. The average home insurance claim went from $20,000 to $40,000. So we have all of these items that really started affecting insurance. And what the insurance companies learned was every policy they sold was below market value, and they were actually losing money on every policy on average. And so a lot of the insurance companies decided to just pause new business. Some companies said, we're done with the state of California because of your rules and regulations. Other companies just said, we're going to pause. So as a result of that pause, they just it made the market a lot more difficult to work with. And it made it more difficult because there's less companies offering policies. So here we are. I mean, State Farm made the headlines. Like, let's just talk about State Farm. State Farm made the headlines by saying, we aren't going to offer new policies. They paused. This was, gosh, almost a year ago they did that. They got a rate filing through. They got a rate increase through on their home for about 25% average. But I have a friend that works at State Farm, and he said, we're probably not going to start writing new policies until 2026. So even though insurance companies are now getting their rates approved by the state, a lot of the companies are still sitting on the sidelines and just waiting. So back to where we are today, the Department of Insurance has realized that they don't want California to become like Florida. In Florida, if you're not familiar, you've got hurricanes, you've got bad weather, you've got a lot of claims, and it's frequency of losses, which is meaning too many losses on a regular basis. And the insurance companies were losing a lot of money. A lot of the insurance companies left. The governor tried to entice them to stay, jumped through all the hoops. They agreed to doing everything they could to keep them, but the insurance companies still left. So I don't know if it's a competition thing with Florida and California or not with their elected officials, and I don't want to get political here, but I think that they basically, California does not want to become Florida. And so they're trying to do everything they can to save it. What I've learned through being on a lot of calls with Ricardo Lara, who's our insurance commissioner, is his tune changed last year. It went from, hey, it's a challenge, we're doing what we can, to we have a real problem and rates are going to go up. And I know that nobody wants to hear that rates are going up, but the reality is the rates have to go up because of inflation. To get the insurance companies back in the market, they have to be able to increase the rates to stay profitable so they're not losing money. I saw a statistic recently where something like California on average, the insurance companies are losing on average in the whole state 5 to 7%. So whatever they're earning, they're losing 5 to 7% on all that money. So they take in $1,000, they're spending $1,050 just to have that policy. So it's not a strategically good state to be in business-wise for them, because economically they're losing money. So that's why they're trying to increase their rates. They're trying to get back to where they could actually stay and do well. I mean, we are one of the largest economies, and that's why they want to be here, but they just need to make sure that they're actually not losing money. So Ricardo Lara now, or I should say back in September, he and Gavin Newsom had announced a series of strategic items that they're going to accomplish by December of this year. So in September of 23, it seemed like December of 2024 was a long ways away. But there's a lot of moving parts to the Department of Insurance, and they're trying to get it all correct. They keep saying by December this year, everything will be okay. And I think that they will have all of the regulations in place by December of this year. And the insurance companies are going to have to file for rate changes for those new regulations. It can take 6 months to a year for those filings to get approved and reviewed. They're trying to trim that time frame down to 60 days, which was something I read last week. Gavin Newsom is trying to encourage, and someone may be creating a law to say the maximum amount of time you have to review a rate filing is 60 days. But for right now, it's 6 months to a year or more. And so what has happened, and the insurance companies have seen this, and this is why they paused a lot of new businesses, they weren't getting the rates they needed in a timely manner. So going back to the time frame, December of this year, the DOI will have everything together, and the insurance companies will file for the rate changes, which means by the end of 2026, all of the rate reviews and rate revisions should be approved. But until those insurance companies actually start earning the premium on those new rates, it will be into 2027. So I think realistically, we're looking at 2027 when the insurance market will actually settle down and normalize. I get a lot of questions of people asking me, will our rates ever come back down? And I would love to say yes, but I think realistically they probably won't, because inflation will continue to climb. The cost to rebuild will continue to go up. I know that everybody has seen that, or the headlines that fires are the #1 cause of loss. I actually don't think it's fires. It's actually water damage. There's more water damage that happens accumulatively throughout all the claims than there are fires. Fires make the headlines, but water damage is really what we have a lot of. I mean, I'll tell you, we have a client who has we have several clients who have had $300,000 water claims. So when you have a house that has a $300,000 water claim, that insurance company doesn't like us. And then they also are trying to figure out, how do you avoid that in the future? However, insurance is about, well, it's supposed to replace everything that you had damaged, and it's not preventative maintenance. It is after the fact. And so I think that insurance companies, hopefully, as we continue moving forward, will start to think about some preventative measures as opposed to just fixing the problems after they happen. There's an insurance company based out of Washington. Forgive me, I can't remember their name, but every insurer, every home insurance company, or every home insurance client with them receives an automatic water shutoff valve that is professionally installed by their home by a plumber. And what they've seen is water damage claims are way down. They're actually making more money than they ever have, and the rates are actually going down a little bit. So when you look at this test case of an insurance company actually did the impossible, it's amazing and it's great. And so I'm hoping that other insurance companies can learn from their success. So we have water damage, we have fires, we have companies that don't want to write right now. Then we also have admitted insurance companies and non-admitted insurance companies. Has anyone ever heard those terms before? Okay, so admitted insurance means you have filed your rate with the state. Everything gets approved by the state of California, and that's the Department of Insurance. That's been the heartache of a lot of insurance companies lately, and just because it's a painfully slow process. The non-admitted insurance companies do not have to file their rates with the state. So they can adjust rates as needed. They don't file their rates. However, because they're not an admitted insurance company, they're not a part of the pool that will come to the rescue if that insurance company lost all of its money due to too many claims. So you have on one side, it's the admitted insurance companies. It's very warm and fuzzy. On the other side, you have the non-admitted, which is a little less warm and fuzzy. And so I think the hard part there is we actually have a lot of non-admitted insurance companies that we're working with, but it's explaining to clients. And what's interesting is I actually had a phone call with an assembly person about this. We were talking about admitted versus non-admitted. And he said to me, you know what, Aaron? He said, I think non-admitted, they just need better PR. He said, I don't think they're necessarily going to run out of money. And I agreed with him. The non-admitted insurance companies that we write with right now, they're closing zip codes. And they're not taking on risk where they don't have enough reinsurance, which is insurance for the insurance. So they are very aware of what their limits of coverage are so that they stay solvent. They have enough money in the bank for all of the claims. So we are dealing with a lot of home buyers who are getting non-admitted policies now. It is normal to us. We're in it, but we do explain the differences between admitted and non-admitted. And I do want to throw in this one disclaimer for you all. I know that you all are realtors and you're in the real estate business and you're not licensed for insurance. And it is good for you to know a lot of this information. My advice would be don't share too much, meaning if you are unsure of an insurance question, send them to the insurance professional, because I don't want you all to get into trouble and going down a road of providing information that you may not have all the answers to. And so, meaning do what you're good at, which is the real estate side and being licensed for that. And if people get in the weeds and they start asking you too many insurance questions, I'm more than happy to answer any of their questions. My team can answer their questions. I just don't want you all to get into trouble for answering too many questions or getting in that situation. So that's my disclaimer for the day. But the admitted and non-admitted, what I'm happy about the admitted is they're still here. A lot of companies are still here. Yes, there's some that have left. Yes, the rates are going up. I had someone Facebook message me today. She said, I'm with AAA. My rate went from $600 a year to $900 a year for a condo policy. My response was, I'm happy that you got a renewal. While it's painful to have that much of a rate increase, it is better than anything else that we have. I'm like, most of our condo quotes these days are $1,600 at a minimum. I said, you should keep it. So yes, the rates are going up and people and home buyers are feeling it. And I know that we're not all getting 30% raises or 50% raises, which is what a lot of times we're seeing in the insurance renewals. I mean, we're seeing 30 and 50% rate increases. So I think if you're doing any sort of farming, it's just having conversations of, hey, it's if they're worried about their insurance, you could talk to them about their insurance. Be like, hey, did you get a renewal? Like, that's a positive. That's a win. We have a lot of people that call our office that are just shopping. Our first question is, did you get a renewal? And when it's a smaller percentage increase, it's like, that's great. Like, we're very happy you got the renewal. We're unfortunately not going to find something better for you. And I know that's weird to say and people don't want that answer, but unfortunately, it's the truth. You may also have homeowners or people that are in your farm or you've already sold to that are getting these very long questionnaires from different insurance companies before they will renew a policy. Our advice is complete the questionnaires, send in the photos, jump through all the hoops, and do that because the next best option for home insurance is probably twice as much. And so, I know it's a pain in the butt to take photos of your hot water heater, to take pictures of your roof, to take pictures of your plumbing under your sinks and things like that. But our advice is take all the photos, send it in, work with your current insurance company because it is easier for your life in the long run if you can do that and maintain your coverage. Another item to just be aware of is making sure that everyone's paying their bills on time. We had a client last week. He's with the California Fair Plan. I'll come back to what that is in a moment. So he's with the California Fair Plan and his mortgage sent in a check on the 1st of the month. Here we are, the 15th of the month. His policy hadn't been paid yet. We knew they had it. It just hadn't been processed yet. And they were threatening to cancel his policy without payment. A lot of insurance companies are doing that. If your payment does not arrive on time, whether it's from you as in the client or from your mortgage company, a lot of those insurance companies will cancel your policy and you can't get it back. So just make sure your policies are being paid on time. So back to the California Fair Plan. The California Fair Plan is the state fire insurance company. It's supposed to be the insurer of last resort, meaning you've tried all the other companies, you've tried everybody, nobody will take you because you're in a tough location. So it's a fire-only policy. It does not include liability, theft, or water damage. Another policy to fill in those gaps is called the difference in conditions, which covers you for liability, theft, and water damage. So the two married together basically create a whole policy. So we have clients that have purchased out in the Canyon or up in Arrowhead or even Big Bear, and a lot of them, they are on the Fair Plan now. I mean, we've got quite a few clients that are on the Fair Plan, and they have grown probably by 300% in the last couple of years. They're actually the fastest growing insurance company in California right now, and they don't want to be. But what's interesting about it is, and the question comes up of what if there's a tremendous loss in Lake Arrowhead or Big Bear and the whole area burns? Won't they run out of money? So going back to what I mentioned earlier about the insurance companies being admitted, they're all part of this pool where they all support each other. And what I mean by that is if an admitted insurance company ran out of money, the other insurance companies help fund the losses if they run out of money. So it's designed so that the system doesn't fail. So while yes, we're in a tough spot right now, I'm hoping 5 years from now, we look back and we go, that was rough, but we're really good now. And I'm hoping that we can come out of the weeds and we come out stronger and we come out better. That's the hope. And I know that that's what the Department of Insurance is trying to do. I know that I feel like I get a lot of lip service from them and a lot of the calls, but I think that they're kind of stuck in the position that they're in. And I think they're doing the best they can to try and keep the ball moving forward. So I've rambled on for a while now. I really want to know what questions you all have. And I've got my chat open. If you want to type it, if you want to ask it, just anyone have any questions about insurance?
Well, I have a couple questions. So the admitted and non-admitted, do they have to, does the insurance company have to disclose whether or not they're part of that group or not part of that group?
So for the most part, the companies you see advertising on TV, those are admitted. The non-admitted, you'll see an additional tax in their fees. And that's really the easiest way to tell the difference. So if there's a surplus lines tax, that means they're non-admitted. There's a lot of commercial insurance companies that are non-admitted, but in the personal lines world, which is homeowners, you usually don't get a lot, but there are more now. And even companies like I'll share with you, there's a company called Bamboo Insurance. Bamboo Insurance, they have admitted and they also have a non-admitted. On their admitted, there's no extra fees. On the non-admitted, there's extra fees. They tack on a broker fee. They have a surplus lines tax, and that's how we know the difference. But I think those fees go to help fund, it's, I don't know if it's funding the state or funding the DOI. I forget what those fees go to, but yes. All right, so Sylvia, what is the contact information? I'll put it in chat for you then. I'll get it for you. What other questions do you have?
I kind of know your answer to this one, Aaron, but when are you gonna be able to insure condominiums?
So we as an agency have two non-admitted options for condos, but the condos have to be newer. And there's a few coverage items that are missing or are a little shorter on coverage in those options that we have. For that reason, I don't love them. So we've actually referred AAA to a lot of people, and I'm trying to think who else is writing condos these days. Geico was, but I don't think they are anymore. So there's not a lot. If you can find a Safeco agent, so like we're a Safeco agent, but we're paused with them as an agency. And if you can find a Safeco agency that can write a policy, they're allowed one policy a month. So, and it has to be a package. You have to do the home and the cars together if you're going to get a Safeco policy.
And just a shout out here, if you didn't try Aaron for insurance, you should, because he's the best.
Thank you, Ed. And Ed will attest to this. I mean, and if any of you call our office, we are looking out for your best interests. We review a lot of policies, and it's most often we're just saying, as I mentioned before, it's like keep what you have, or try this other company. I mean, we refer several other insurance agencies on a daily basis for things that we know that we can't do. We have an Allstate agent that we know that she can take some higher brush homes and a higher value. And so we refer her out. There's a AAA agent that we know. We refer him out. I mean, we can't do it all. I mean, I even had a realtor last week. She said, my mom lives in Montana. And I said, I'm not licensed for Montana, but let me reach out to another agent, and got the other agent's info for her. So, I mean, we have resources for what we know that we can't do, and we try and stay in our lane and just be transparent with everybody.
So on the fire, it's kind of interesting because I was talking to some agents and they were actually running into trouble just because of the zip code. And they weren't even in an area where it was like, what? How could this even be a fire area? You know, so
that's a good point. So I mean, I'll share, we've got a client who is oceanfront Laguna Beach. And when I say oceanfront, like he is oceanfront. It's a high fire zip code. So the whole zip code is, got this mark on it that nobody wants it. So there are certain zip codes where some insurance companies either hit capacity and they just are closing the zip code because they don't have more room to sell policies, or they're worried about a catastrophic loss. So many years ago, gosh, I think it was Allstate. Allstate, they had fires somewhere, or maybe it was the earthquakes many years ago. They had whole neighborhoods that were gone, and they had written too many policies in this neighborhood, and it really took a hit. And so a lot of insurance companies are trying to figure out how to spread the risk better and not have too many insureds in one location, so that if something catastrophic does happen, they're not getting killed. But you're right. There are certain places, oceanfront, even not high fire, where you still end up having a hard time. And that is something to bring up also. So AB 38, is anyone familiar with AB 38? Okay, AB 38 is the high or very high wildfire disclosure. So on your NHD reports, if you have a listing that's in a high or very high wildfire area, you have to get the fire department to come out and inspect. I'm not an NHD person. I'll be the first one to say that. So please lean on your NHD people for this. But I want to share with you is NHD reports and the mappings that they use for those, there is no correlation or connection with the insurance companies. So when you get an NHD report and it says a very high fire area, it may be a high fire area for insurance, that may be harder, but it's not always the case. I've seen it where NHD reports say high fire and we have no problem getting insurance. I've also seen it where there's no fire on the NHD report and we have really struggled to get insurance. So just keep that in mind. There is not a correlation. I also know in the RPA that's coming out and the new update that's coming, I think in June or July, there's going to be an insurance disclosure in there. And it's just make sure that you're doing your due diligence for your buyers. And the advice I always give is the day you open escrow with buyers, have them shop for insurance. Because you don't want to get all the way to the last day of contingencies and then not have an insurance quote yet. You want to be able to look at it confidently and know that you have an insurance quote locked up before you get to your contingencies, so you can remove them and you can feel comfortable as opposed to waiting the last minute. So just keep that in mind the day you open insurance or the day you open escrow for a home buyer, shop for insurance. So there was something I wanted to share. So I talked about who's still writing. We all know State Farm paused, Allstate paused. We as an agency, we have Travelers, we're paused. We have Safeco, we're paused. We have Nationwide, we're paused. Guard pulled out. MetLife, that was purchased by Farmers, just pulled out. There's a lot of companies that have pulled out or are paused right now. So the question is, who's still writing? We have a few companies that are still writing, like Bamboo is still offering policies. We have a few other non-admitted companies too that we work with. But then I know that AAA is still writing some areas. A company called Amica is still writing in some areas. It's AMICA. And there are a few others out there. So there are solutions. And I know Mercury is writing some stuff too that other companies is not. So again, if you are working with the buyers, shop early, do it the day you're opening escrow, because it's challenging. But again, if you call us and I know that we can't do it and I typically can look at the map and know what it's going to be or who will take it. If we can't do it, we're going to refer you to someone else.
So can I just say from personal experience, just moving back here, one of the things that I was really shocked at is the underwriting period. That, I mean, I don't know, like, I've never had that with insurance before. Like they just, okay, we're going to insure you. And all of a sudden they're like, no, we have a 15-day. And you're like, what? Like,
Yes.
so people need to be aware of that, I mean, I don't know if that's with every company, but that was like my first experience with that.
So I think a lot of home insurance companies don't have a delay. Some may have a 5-day or a 10-day, but I think most of them, they're okay on the home insurance. On car insurance though, they could have a 5, 10, I've even heard of a 25-day delay. Meaning if you have a valid quote, you want to proceed, you make a payment today, and it's good 25 days into the future.
Yeah.
So yes, it's crazy.
Hadn't seen that before. So.
And here's a little bit of good news. So we work with Progressive on our auto insurance, or for auto insurance right now. They had a 10-day wait. They just emailed us 2 days ago and said, we're going to 5 days. And so what that says to me is insurance companies are starting to tip their toes back in the sand. They're starting to say, well, it's getting a little bit better. And I think that the more that insurance companies start kind of tiptoeing back in, it will get better for everybody. What other questions do you have? I mean, I can talk about some claims. and how claims affect you or your owners? Okay. So I mentioned water claims earlier. Water claims really are the biggest cause of loss in Southern California. And I really think it is on average for the state. We have a lot of clients that have had water claims. Our advice really for the buyers is Tom, good question. I'll get to it. Tom's question is, how long does a claim stay with the home? So twofold. One is, if I have a claim at my house, that claim stays with me for 5 years. 5 years. Not only if I file a claim and I actually get some money out of it, my rate now goes up by 40% for about 3 years. So it's really a math equation to figure out if you're going to file the claim or not. But also, if I move somewhere else in the next 5 years, my claim comes with me to my new house. It stays with me. So the one company I mentioned earlier, Bamboo, they actually hold claims against the home itself. They don't hold it against the person. So it's very interesting for us that if a home that someone is buying had a claim, it's going to be counted against those new buyers. And that does happen with other insurance companies too. I know AAA is really tough on water claims, and they'll increase deductibles for water claims depending on what happened. So yes, 5 years is typically how long the claims stay with you. But going back to the new home buyers, if they're going to do any sort of remodeling, our advice is to do a repipe. So repiping a house, no one ever sees the benefit of a repipe in a house, but so speaking from experience, we bought a house. It was built in 1972. We remodeled it. This is about 8 years ago now. We did not do a whole house repipe. And 6 weeks after we finished making the house perfect and ours, we had a slab leak. And we fixed that one slab leak. And 6 weeks later, we had a second slab leak. And after that, I just said we're repiping the house. So without fail, it seems that there are slab leaks for the new home buyers. And I don't know what it is, but my advice is typically if the house is older, meaning if it's early 80s, or depending on location, if there's a history of slab leaks or pipe leaks, as in Ladera, Rancho Santa Margarita, they have a greater history of water leaks, even if their home's being built in the 2000s, just repipe the house when you move in. It's going to cost you, it could be 10 grand, it could be 15 grand, depending on the size of your home, but it is one of those things that you will sleep better at night knowing that you don't have to worry about a slab leak and a pipe leak. So other questions?
There was a question in the chat about from Joe.
Oh, I missed that one. Yes. Yeah. Okay. So Joe's question is, I've heard some companies are requiring roof replacements prior to renewals. Is that correct? What allows them the authority to make the requirement? So roofs have a certain lifespan. And the lifespan is, well, now it's 50 years is what it seems like. But I think a lot of insurance companies outside of California have a lot, more, well, I guess they're more strict on how new your roof should be. So for example, Florida, they don't want roofs that are older than 10 years. So literally every 10 years in Florida, they expect you to replace your roof. And if you don't replace your roof, then the insurance company will drop you. So it's one of those things where, do they have the right to do it? If you want to remain their client, they do. And I don't mean to sound like a jerk when I'm saying that, but the insurance companies can decide. They make up their own rules. They decide what they want to accept and what they don't want to accept. We've had a lot of clients, and I'll just tell you, I mean, we've had a lot of clients with Safeco this year get non-renewed because there's moss on the roof. Moss. It's a concrete tile roof, might be 20 years old, could be 25 years old. There's aerial imagery that they're using from a satellite that is 1,000 miles away. And they're saying, oh, it looks like moss, we're going to non-renew you. We're at the point where we're fighting all of them. And we're actually getting photos from our clients of the roof to see if there's actually moss on there or not. And trying to keep them, keep their policy renewing. But yes, it's really challenging right now with roofs and the satellite imagery because the time of day photos that are being taken are not really good. We had one client where he had multiple angles on his roof. One part perfectly black, another part all green. And the distinction was just the angle of his roof in the photo. And he hopped up on his roof, he took photos, we sent him into underwriting. They said, he's fine. But it's a matter of fighting back with them and not agreeing to them saying, you have moss on your roof. But going back to the age of the roof, yes, it's, I mean, again, going back to personal experience, I had a clay tile roof on my house. It was almost 50 years old. We had a leak that started coming in under one of our eaves. I had told my roofer about it, and he said, yeah, the paper went bad under your tiles. So while the tiles themselves are fine, there's paper underneath it that is the waterproof membrane. So if you didn't take all the tiles off, you didn't replace that waterproof membrane within the last 25, 30 years, you have a greater chance of having a leak. And those insurance companies want to know that you're not going to have a leak and that you're taking care of your home. So I don't know if that answers it, Joe, but I hope that clears it up a little bit. Unfortunately, they make the rules, and if we want to remain their client, we have to play by their rules. What other questions do you all have? Thank you, Joe. Any other questions? Okay.
I would say, is there any other suggestions that you might have for realtors that they could be, prepare their clients better, whether there be a buyer or a seller, that anything that they could do that would help them be more prepared and give them an advantage for sale or that sort of thing, timing wise and stuff?
I think that if one of the biggest things, and I don't know how to do it, is if you're a buyer's agent and you're working with buyers and the home has not been repiped, trying to negotiate in some sort of repipe credit. I mean, we have a new neighbor, literally 3 doors up from where we live. He moved in, and we were having the conversation the other day, and he said, "Oh, I'm remodeling the kitchen." I said, "Have you ever has the house ever been repiped?" And he said, "I don't think so." I said, "Your house is built in 72. You should repipe your house, because you will have a slab leak." And he's like, "That's a great idea." He'll add it, but that's an additional expense that most people aren't expecting. I think being that it's a seller's market, it is challenging to ask for a repipe credit. But I think as far as educators, meaning if you're the realtor, it's just having the conversation of, hey, something you may want to consider is repiping your house. It will save you a headache down the road. And just kind of, I mean, you all are resources, you are educators, and the value that you bring is your experience. And so I think that, yes, if you're saying, hey, let's get on insurance immediately, and if you need help, I know someone, or whatever the case may be, it's do it immediately. Just guide them in the right ways so that they don't feel overwhelmed through the process, but you're just educating them of, hey, let's get you an insurance quote right away. Once you move in, if you're going to do any sort of remodeling, maybe get a repipe. So just something to think about. So if you're planting those seeds, you're helping save them headaches down the road. Any other questions or thoughts or any of the above? Okay, here's another comment from Joe. Earlier you said water claims outnumber fire claims. Do you know by how much? That's a good question. So all of the insurance companies have to file their rates with the Department of Insurance, and it is public information. I won't bore you with how to find it and to dig through it. There's actually an insurance group that I'm a part of. There's about 150 of us insurance agency owners that are in this group. We talk every Wednesday. We're on a call for an hour and a half, and we talk shop about everything from A to Z. So when the insurance companies file for these rates, when we're on this group, a lot of times we will review it and talk about it. So one of the rate filings that came through last year was for Amica, one of the companies I mentioned earlier. I've only ever heard good things about Amica. In their homeowners rate filing, they break down all their dollars for each category of loss. And so what they have in there is they've got the liability, they've got the fire, they've got the water. In their breakdown of costs, the dollars associated with fire was $50 million, rough numbers. The dollars associated with water was $90 million. So when I saw that there's 50 million for fire claims and there's 90 million there for the water claims, I went, why aren't we talking about water more? And so that's just one example from one company. And I know Amica's been around for a while. They're not one of the big players by any means. I haven't seen that data listed out in that way from any of the other companies in their rate filings. It's something that I, of course, want to try and dig up and find more data on. But that one very clearly said it's, yeah, a 90 million for water and 50,000 or 50 million for fire is a big, big difference for how much they're expecting for claims. Joe, you've got good questions. What other questions do you have? Or anyone?
No one. So basically what I heard you say is if you definitely have a policy right now and don't get so frustrated if the rates go up, stick with it if you can. It's okay to shop it, but don't get a lapse. Whatever,
Yes,
you know.
number one,
Yeah,
pay
'cause
for
it's
it.
too hard to find. Yeah.
Yes. Oh, definitely pay for it. But if you're 45 days out, that's a good time to shop. But just know that even if you got a 10% rate increase or 20% rate increase, it's normal. Most insurance companies are taking that right now. And it's while it feels like they're attacking you and you feel betrayed by them, unfortunately, it is a challenging market and there's not a lot of options out there. And the options that are out there now are just more expensive. Sylvia asked, do I handle LA County? So we are licensed for all of California, Nevada, and Arizona.
Right.
Sorry, I have a question.
Yes,
This is
Ruby.
so if somebody is building an ADU
Mhm.
and so insurance needs to be added, have you heard any insurance company dropping, the main house insurance because of that?
So it all depends on how the ADU is being built. So some
Okay.
insurance companies do not. So if the ADU is actually physically attached, it now becomes a duplex. If the ADU is completely separate, is the ADU going to be rented to someone else other than your family?
Yeah.
Okay. The moment it is rented to someone else that is not your family members and just being used by your family, you should have a separate landlord policy. So
Oh.
you have primary home coverage. Now you have ADU coverage, which would be a landlord policy, completely separate.
If the main house is also a rental, is that still considered another policy for the detached ADU?
Yes. Yep. So each individual freestanding building, when they are rentals, should have their own landlord policies.
Okay, I see. Have you heard if like builder owners are having hard time getting insurance for ADU?
We haven't dealt with a lot of ADUs. We've got a few where, I mean, we have one where they literally attached it to their home and then it just became a duplex. But it's making sure that insurance company is comfortable with having a owner occupied and landlord situation in the same place. We have another one who is actually, they recently bought, they're up in LA. We had to do what I like to consider and I hate saying this, a bass-ackwards sort of policy, meaning the company that we were working with, the only one that we could get because of the age of the home, they wanted a landlord-only policy, even though the owners were living there. So they put the liability from being a landlord was the top priority for the insurance company. And then even though the owner was living there, their liability became secondary because the landlord situation was more prevalent for them. And so that's the only company that I've heard of where they kind of do it backwards. But so so the answer is connected, duplex, triplex, fourplex, whether it's owner occupied or all rentals. But the moment you have separate buildings, you want separate policies. You need separate policies.
Got it. Thank you.
Sure. Tom asked a couple questions. Do you need to let your insurance company know when you get solar on your home? So yes, you should. Meaning if you're making a home improvement and you're making upgrades and the cost to rebuild your home is now more, and it costs you 40 or 50 grand for the solar, whatever it costs, you should let your insurance company know so that you can increase the coverage. If you want to take the chance and not increase your coverage because it will increase your cost of insurance, that's up to you. But yes, you should let them know. And then another question, how much more is landlord policy compared to an owner occupied policy? Landlord policies are usually a little bit less than owner occupied policies because you have a lot less personal property. And you're missing a few other little coverage items, but landlords are typically less than owner occupied. What other questions? Oh, Dia, you're on mute.
No, I'm good. I was just reading the chat to see if there
got
were
it.
any other questions for you, but it doesn't seem like there are.
Okay.
Well, it's been awesome. If there's no more questions, and we do really appreciate it. It sounds like you're open to helping and answering questions and educating. So make sure if you want to drop your information in the chat one more time, just so that
Yep.
everyone can make sure that they take Aaron's information if you do have questions. And it looks like that you're open to helping us with what we might need. So it's great.
It is challenging. And the one thing I don't want anyone to ever feel is that you're either alone or you don't know where to go to get information. And so, I mean, look, we're a resource. We're one of those items where we used to be the afterthought. And I think now we're the first thought when it comes to buying a house. And so, yes, it's important that you all are supported and that you can get the deals done and your buyers don't get scared away.
Awesome.
One more question before you go. There's an earthquake. So what about earthquake policy? No one's talked about it. So earthquake insurance, I think statistically about 10% of Californians have earthquake insurance. It's personal choice. And expense-wise, it depends on where you live. So for example, in Orange County and South Orange County or even San Diego, you're not on a fault. When you get over to Corona and you get over up into LA and Long Beach, you're on a fault. So the cost of earthquake insurance, San Diego and Orange County or South Orange County is less. But over in Corona, it gets high. In Long Beach, it gets pretty high, and same with LA. So it's personal choice. It's really up to the owners if they want to get it. It's something that the insurance companies, they have to offer it. So when any of your buyers get a home insurance policy, it is required by law that they are offered earthquake insurance. So at least they get something in the mail, and then it is good to have a conversation about it and talk a little bit more about it, but at least your buyers do get something in the mail and they can learn a little bit more.
That's good to know. Well, we thank everybody for attending today. And if you have topics that you would like to have more discussion about, or something that's relevant or you're running into, if you can let us know at Escrow Options Group, let your sales rep know. We would love to bring that information to you through our Escrow Options Group University. And so we thank you so much for attending today. And thank you, Aaron. We really appreciate it. I mean, I know I found this very interesting, and it's always something trying to stay ahead of the game, right? So, all righty. Thank you so much.
Great
Thank
job,
you.
Aaron.
Thank you, Aaron. Appreciate it.
Pleasure.
That was
Have a
good.
Thank you
great
all.
day, everybody.
Bye, guys.
Bye. Oh, Tom, I thought
I
you got
did.
off the call. By the way,
No.
Tom's our vice president of
Okay.
sales. So-
Hello, everyone. How are
Yeah.
you? It was a very
Hey,
good
Tom.
call. Thank you, Aaron. Hey, Ed, how are you?
Good, thank you, Eddie. Thank you,
Nice
Aaron.
to see
Thank you.
everyone.
all.
Thank you guys for all your support.
Yep,
Thank you.
that's awesome.
Bye,
Thanks.
guys. Have a great day.
All right, have a great
You too.
day. Happy Memorial Day, big weekend.
Thank you.